Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Tuesday, January the 7th, 2025. Now, you're going to be wondering, why is Michael saying that this is also for the NASDAQ? The reason is because our wonderful analyst, Sascha, has got food poisoning, literally food poisoning, salmonella is what he told me. And so he and his wife are really down, feeling very sick today. So I'm pulling double duty. But I'm going to start here with the S&P 500, and I'm on the 4-hour chart. It was an interesting day, right? Because we started to feel like it was going to continue to move higher. It did actually move higher on the opening. We did manage to get up to 6,066, I believe it was. Let's just take a double look. We got up to 6,068. Then the market opened. And then we rallied again and we got up to 6,000. Oh, actually, no, we didn't. Let me see what that one is telling me. We got up to 6,045. Then we started to hit, and we got hit, and we got hit, and we got hit. And the S&P dove, and dropped a fair amount. Now, what was behind that? Well, I think there were a lot of things because basically the Dow held higher for much of the day. The Russell held higher for much of the day, but it was the NASDAQ. And we're going to get to that in a minute, but the NASDAQ decided it was just going to take a dump. And it started with Tesla. And then we had NVIDIA. Then we had Apple get a downgrade. That kicked it into higher gear. But we continued to have basically a couple of stocks remaining higher. In fact, NVIDIA really was kind of inching back and forth to start to move higher. And eventually it did break even 140. So we have to look at what NVIDIA has now done in 2 days. And I don't know, I'm going to just double check because I'm pretty sure it was yesterday. And so, no, it was today, as a matter of fact. We had NVIDIA open at 153. Trade up 10 cents off of that opening to 153.13 and then reject it. Reject it totally. And it dropped to a low of 140.14, 140.01, closing at 140.14. That was quite the dump. So that really dragged down the NASDAQ. Which again, I will get to in just a minute, but because the NVIDIA is also in the S&P 500, it didn't manage to kind of catch a second wind and try to get itself back up towards those highs, even the regular New York session high or even the Globex high. It didn't even come close. So what are we going through? Well, I'm going to start with the preferred count, which basically is still the same. But what I'm going to do is the preferred, and which carries 2 within it, and then also the alternate, which carries a much stronger message. Now, within this preferred count, we're still, in my opinion, within a minor fourth wave, long day, an intermediate fourth wave. Now, within that intermediate fourth wave, I'm still labeling the first ABC, again, 4-hour chart, the first ABC as completing minor A. Small failure, which I know goes against a grain in a lot of different analysts' mind, including mine. But I'm looking at how strange the market has been and what the market has been doing. Now, to leave that alone for just a moment, I'll tell you, the second count, when I'm running them side by side, which picked up a little bit of credibility today. And that would be that we have 1, 2, 1, 2. And we're starting to come down in a third. So this would be, so we have wave 1, wave 2, wave 1 of 3, wave 2 of 3, wave 3 of 3 now in progress. If that's the case, we should not stop just yet going down. We're in a 3 of 3 move. It certainly kicked. It kicked into gear beautifully. But what it does suggest is that we should have another severe down day and we start breaking below this level. Now, what would that suggest? This minor A that I've placed here is gone, yet to be seen. So we have 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5, A. And then we have a B wave, and then we have a C wave. Now, that fits in terms of what we would expect on a time basis, what an intermediate fourth wave should actually take up in terms of time. So again, even if I'm looking at this, which took no time at all, and I bring it over to here, well, are we now in the beginning stages of this? Which would be the C wave, and then in that case, that would be A, B, 1, 2. 1 of C, 2 of C, and we're starting to come down. This does not count very well as anything but a 5, but again, so many things have really changed how I strictly view things. And I've always had, in all of my years of doing Elliott, that you had the ability to where a 3 was a 5 and a 5 became a 3. And unless it is so blatantly, clearly impulse that nothing else could stand in its way. And that it could be the case here, in which case we go back to ABCA and then another A of B. Now, A could be 5, and this could be a B wave, and then we're going to come back up on a C wave, and it's going to be minor B. And that's the case. We have some markers up here, 6,066, and then we have 6148 to 6150. Now, again, ABC as it is really kind of strange, and I agree. In fact, Daniel, I know you're listening. You make such a very solid point that RN Elliott likely is like either going to step up from the grave and go like, what are you doing, Michael? Come on, you know better. Or like, I see your point that you have to start allowing for things because of the way that algorithms are putting these moves in. And either way, Elliott warned against not necessarily, let me just rephrase. There are rules that I hold steady and fast, and they're no break rules. One of them is wave 4 cannot overlap wave 1. The other one is wave 2 cannot exceed the starting point of wave 1. Then it's not correcting wave 1. Same thing, if wave 4 invades the territory of wave 1, well, then it's not correcting wave 3. So those two I hold fast. They're unbreakable. Now, the rule of alternation, I think that's just the name that Elliott gave. That one is, in my mind, not a hard and fast rule. It is one that I constantly will try to put into place. But one of the things that I've noticed since we've really gone totally quantitative in terms of our trading and algorithmic in terms of how we execute these trades, that the rule of alternation doesn't fit as well anymore. So there's that one. That doesn't mean that it's gone. It doesn't mean that I don't look at it and go like, well, if this was a flat, I'm looking for a zigzag in the other, or if wave 2 is a zigzag, wave 4 should be a flat, which in this case fits, right? Possibly. So again, I'm just piecing together what I believe the market is attempting to do. So under the preferred, if I have the A, B, C, then this is A of B. We've got a B wave, and then we've got a C wave going back up, and it likely will come in and be more of a, hold on one second. It'll become more of a flat. So that would fit if we stop and we go up. Now, let's go over and look at the other scenario, which also would fit under the preferred count, which suggests that the A wave is forming 5 waves down. Now, under that, this is 1, this is 2. 1 of A, 2 of A. Wave 1 of 3 of A. Wave 2 of 3 of A. The beginning phases of wave 3 of 3 of A. So where would that then suggest that we get to? I would think we probably drop another 300 and end up somewhere down around 56.25-ish. And then we rally in the B wave, and then we drop into C wave, and that then brings us down to here. Now, how's that all going to fit into our current thing about, that's, everyone's going to be bullish on the current administration or the new administration coming in, etc. I don't know if you paid attention today to the new administration, head of that administration, stepping up to the microphone and just kind of saying what was on his mind and what he thought we're going to get done. Market didn't like it, particularly when he said that he has full intent of placing tariffs on Mexico and Canada. Both sides. Let's go to every border of our country and say, we're going to stick tariffs on anything that we import from your country. Market just really then started to go tick, 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 tick down. So again, how do we want to look at all of this? I say, let the market decide. I don't need to decide. And I don't think the market is really putting a little hole into there. They're just taking the reality of you start placing or you start a trade war with our neighbors in the North America Treaty, then it's like, okay, what happens that? They break that. So then we have no treaty for trade between Canada and Mexico. Okay, what happens then? It could be turned into a mess. Add to that, they were likely going to stick tariffs on China. Well, what happens then? Folks, it will be a big mess. If we thought in 2018, when he decided to have a little war with China, that had a negative effect on the market, consider expanding that to two continents, the North American continent and the Asian continent, and splitting a treaty that was put in place, I can't even remember how long ago, between the United States and Canada and Mexico. 3 were trading partners with each other. We're deciding we don't want that anymore. Okay. I don't think that's a good idea, but that's me. Anyway, I think that there's enough to drive this market down to here before intermediate wave 4 is completed. And then we rally in intermediate wave 5. And what could kick that rally into place is that the trade war doesn't work, everything gets changed around, and bingo, we are now open for trade with everybody again, and that we go back. Think about it. You want something to attach to it, that could be something. In the meantime, we're waiting for the market, and I think we'll become abundantly clear shortly as to which count is in play. Right now, I'm going to leave the preferred count, but the first version of the preferred count versus the second. The second would be a much stronger decline for wave A. That might just be in. And I think that it's not going to take much longer for us to really put that into place. And what would help is that today's low was at 59.35. Well, first of all, via the futures market, we break 59. Then we break 58.74. We break it and we start heading down. And that would be just within the third wave. 1, 2, 1, 2, 3 of 3, 4, and a 5 of 3, 4, 5. And I think we end up somewhere down here. And then that would be wave A, minor wave A. So again, this all could be taken out, switched around. It's a little complicated, and to be honest with you, I probably will by tomorrow change it around, but I want to see how this trades right now. And again, I kind of like the other one, the 1-2-1-2, because this is best counted as a 5 in my mind. So that's 1-2, 1-2, and we're coming down in a third. 3 of 3. So it's 1 of A, 2 of A, wave 1 of 3 of A, wave 2 of 3 of A, and we're in 3 of 3 of A. Okay, so that's the S&P. So again, for tomorrow, if I bring this down, let's just take a look at the hourly chart, kind of like 1, ABC, 2. Is this a third, a 4, and a 5? I don't think so. And I come down and I look at my 15-minute chart, and I open that up. It got it really congested here. So I think if anything, we got a 1, ABC, 2, maybe that was a 1, that was a 2, and now we're building on a third. And maybe the 3 is down to here, and then that's a 4. And then we have 1, 2, 3, 4, and we got one more for 5. And then maybe that completes wave 3. But I think we got to get ourselves below 59 and get closer to there to finish that third. And then come back in a 4, and then come back down. And we really might end up all the way down to here. So maybe this 3 goes further than that. So we break that. That would be a pretty good sign that the other account is not working. So this would go, and it would be 1, 2. I got it back. Let me just go back out to my hourlies. I'm sorry. So it would be 1, 2, 1, 2. And then we're coming down in a third. Breaking that would really, I think, negate this particular version, and then we'll go into the other where wave A is going to take much longer and drop much further. Okay, now let's take a look. Back out on the daily, we can take a look at those moving averages and see what they look like. Okay, 20, broken, turning lower. 8, broken, turning lower. 50, broken. The 8 is below the 50 and remained below the 50 and continues to head lower. The 20 basically was flat. You can see it started to angle lower. So that's up next. If the 20 breaks the 50, then what we got is the 8, 20, and 50 in alignment for continued downside. Then we've got this guy down here. And I think it could be broken as we get down to there. And everything should line up possibly on a daily chart for continuation. Remember, overhanging this is it's an intermediate fourth wave. So I really don't have a more bullish view to present in terms of that wave 3 is going to move up to here, and wave 4 is going to move down to here. And this is a 1, 2, 1, 2. No, I don't see that anymore. So I'm leaving this as is. I do believe we're still in that intermediate fourth wave, and we've got much more to go. We just have to allow the market to determine, is it going to be A and then A, B, C? And if it is, how much lower, how much further do we need to go? I believe this came in at 618. So for B wave, that's pretty good. In fact, I can just put that back up and we can just take a look and just go right there. Actually, yeah, see, it came below 618, was heading for 786, and it can. B wave can come all the way down to there. B wave can come all the way down to here. And then come all the way back up. But then the overall B wave won't really be getting up much higher. But from here, we have A, possibly B. We can rally back to 6150. I still call that a B wave, and then have that C wave bring us all the way back down. Right now, my own personal, I just didn't change it for the sake of time. 1, 2, 1, 2, and we're coming down. And minor A will end up down here somewhere. Okay. Let's go over and take a look at the NASDAQ. I have seen Sascha's charts, and basically what we're looking at here, let me bring this down to the 4-hour. Actually, I'll just keep it on the daily for right now. Go to there and just open this up. Well, there's our markers, right? For the fourth wave, for the intermediate fourth wave. There's our marker, 17,983, with that low being 17,882. So about another 100 points below with this one, this marker. And that fits. So again, 1 of A, 2 of A, 1 of 3 of A, 2 of 3 of A, 3 of 3 of A. Again, what we can do, I'm going to bring it right down and look at our 4-hour. Actually, I'm going to bring it right down to the 1 hour. Coming into here, the way I've got it is still leaving it as an ABC. Failure here. Actually, no, this one didn't. This this C wave did make a slight new low over this one. So slight. It wasn't a lot, but it was slight. Excuse me. So that fits, but that leaves this open that this is A, we're coming into here, AB, maybe a C wave. We got 21,154, 2191, 93, somewhere in there. That's 882. Here's 2.882, all in the same area. So that could fit to put a C wave in, and then we turn around. That's a C to put in the B of the B. And then we turn around and rally up in a C wave, and then we would be able to mark that. And it probably wouldn't come up too much further. If it got all the way down to here, we're likely not going to get to too much further above there. Maybe back, oh yeah, up towards here, maybe a little bit higher. But, originally I said we had the possibility of getting back up above 22,000. That it's more and more diminished as we continue to sell off. Now, the other side of this coin again is 1, 2, 1, 2, beginning of 3. And this could be 1, 2, 3, 4, 5, wave 1 of 3 of 3. So we just start to subdivide again. 3 of 3, largest. It's the middle section. It can be really powerful. It's kicking off exactly like that. So I'm very tempted. I've left it here because I want one more day. But if it's not the A's here, we're going to look to be putting the B of B in. We would think that it's going to come right up through all of this. A break below 20,983.75 does it for us. Then this goes invalidated, and it's going to be 1, 2, 1, 2, and we're falling in the third. And it would be of minor wave A. Now, pushing it back out to the 4-hour chart, where can that bring us in? Well, we're looking at 19,691, honestly. And then we get a B wave. So here, okay, we had that. Then we had a rush up, and actually this was an irregular. So let's say we got down to here. We get an ABC, and we go flying back up and put in a B wave. And then we do 5 down. And you remember, again, I'll take it out to the daily so you can see this drop. 1, 2, 3 days. 3 trading sessions. And the market dropped from 20,248 to 17,882. Quite the drop, right? I purposely even had to think to myself, that's huge. And we survived. Are we getting ready to drop back into? We went through all markers today in terms of call wall, put wall, volatility triggers. Volatility was still way above the market. And I thought originally this morning, they're going to go up there and they're going to take that out. And then we're just going to keep going up for a while. No, no. And what killed it was NVIDIA. NVIDIA got to 153, opened at 153.03, got as high as 153.13, and that's all she wrote, and it started to get torn to shreds. So once again, that was a new all-time high, and the market rejected it pretty much immediately after reaching it. I think it was 2 ticks up to 153.13, couple of ticks, and it was like, no, seller, 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 seller. Next thing you know, it's down massive. Instead of continuing to go up, it was done. Okay, that's a clear sign to me. Did it before as well when it got to 152 and change as the previous all-time high, and they sank it then too. But I think at that time they sank it back to like 134. Is that what we're going to do again? It got below 140 today, folks. It traded like closer to 139, and then before it kind of tried to recover some. So a lot of stuff kind of being worked out, being tossed around. And yeah, again, it's like, where's the money? Where's it going? Where's it being placed? What's going on? And it just becomes very confusing is the word that I really want to use here, because even though we're using technology, we're using our technical indicators, we're using everything that we have in our arsenal to kind of make a determination as to what is this market doing, it's always going to throw that curveball. Okay. What was possessing whomever to kind of think that paying 153 was a good deal? Because, whatever the news might have been. And I think it may have had something to do that there's some leakage going on because the first thing that the incoming president-elect talked about was foreign investment money. So foreign money building a high-tech center here in the United States. And I was like, well, how's that supposed to make things better? So instead of made in America with foreign money, it didn't sound right. And I think one after that, and that kind of was the knock on the door, boom, down she went. Now, okay, so while I'm here, let's take a look at our moving averages. Then I'm going to go back because I got more to talk about. Moving averages are all falling into place. Not too serious yet, although the 50 got broken today by a little, came back, closed above it. It keeps a little bit of a positive spin on possibilities for our opening in Globex and then also tomorrow. Now, otherwise, the 20 is going to come down. The 8 is going to continue to follow, but both of them will eventually break this. I'm surprised that they're still sitting so high on the daily. All right, let me go down to that 1 hour so we can go inside this little package here. Again, if this is A, and then this would be A, we're looking at an ABC. For B, we have our markers down here to where our next levels would be. Today, we got down to 21,279 is where we got, as low as we got. And then they recovered almost back 100 points to finish this session at 21,375. Now, I don't think it's going to be a pretty picture, and I think we're going to start to go. And they were doing that on the back of NVIDIA, actually climbing over $1 in that after session, right? So our normal closes at 4 p.m. Eastern, but then they get to trade between 4 and 5. That's an extra hour. And it's really for supposedly portfolio managers, the ETF managers, everybody's got to come in and do all of their little figuring. And it also allows a lot of dealers and options traders to get some numbers out to figure out, do you want to go home that long or that short, or do you want to adjust with the underlying and or whatever you need? So to give them an extra hour to do all of that. Now, if we kind of stop here without following through, I probably could A, B, then it gets very tacky. I'm going to bring this down to the 15-minute again because we got to get inside this thing and see what does it look like. Here we have 1, 2, 3, 4. 1, 2, 3, 4. There's the 1. So if it goes above 21,428, well, then I'm going to say that this is done. Then we should go up, right? Because that would be 1, 2, 3, 4, 1, 2, 3, 4, which actually does kind of overlap already. Let me go over and look at the close, the line chart. Nope, it doesn't. See, I do that often because, again, Elliott works on a closing basis. So he took his numbers at the hour. So he made hourly charts. And how I started in the very beginning is at the clock when it struck the noon, it struck 9 or 10 or 11 or 12, whatever the hour was, I'd pull out a card and I would write down the price of the index, and I'd go home and manually make pencil marks on that chart and then connect the dots. And that's how I determined my waves, and that's how I made my counts. And that's how Elliott did it. Right now, God bless it, done for us. So that was on a closed basis. So inside that hour, it did break slightly, but this was a push that just created a tail. On the bar chart, it looks a little bit different. If I go over and look at it on the candlestick chart, look at the tail. There's the body. Didn't cross. The tail did, but on a bar chart, we include the tails. That's part of the bar. So, yep, it did slightly, but I'm leaving it be. 1, 2, 3, 4. 1, 2, 3, 4. Come back down. And we put in a little below there, and there's our markers. There's our possibilities. It actually just needs to get itself below 21,279. And that would then bring us into line to put a C wave if necessary. Or if we're going to count this out, back to the hourly. If we're going to count it out, then again, I'm coming 1, 2, 1, 2, 1, 1, 2, 1, 2. And that would be, we're working still within minor wave A, so it's not there. It's a wave 2. It doesn't fit as cleanly, but it could be. So it's a 1, 2, 1, 2, and we're coming down in the start of a third, still within minor wave A. Confusing? Stay tuned. It will clear itself up. And again, going back out to our daily chart, there's our marker. And I'm going to open this sucker up. And so we can really look at it, pull it in a little bit. It doesn't look quite as threatening here. We can make it a little bit clearer. I could clear up all of the labeling and just put it into a minute degree. And that kind of would leave us at a minute 1, minute 2, minute 3, or minute 1, 2, 1 of 3, 2 of 3 fits. It fits. It really does fit. But I'm leaving it here just because I need the market to kind of give me some confirmation. But once again, I'm even leaning against my own count there. So we'll see. We definitely will see how this all plays out and how we want to look at all of this. Again, there's our markers. If we come down there and we hold it, that could be an ABC. And then we should rally, and that would be A of B, B of B, C of B. And then again, coming down to here is going to really not get us too far above. But I would think we stand a fair shot. We stand a fair shot of getting ourselves back above 22,000, but not by much. And in that case, then we're looking at an A, B, and then a C coming back down. And then that C wave would still be expected not to get that much further below these levels, because it would be expected to be more of a flat, but it's bringing it back down. So that's another reason why I don't think it's that. Then now we're here, and if we don't stop, that just gets invalidated. Then we go back and we have our alternate within the preferred. That'd be 1, 2, 1, 2, and we're dropping. And that's the one I'm leaning towards. So don't be surprised if I kind of show up tomorrow and I've already made that change. All right, now let's take a look at what we have tomorrow morning in terms of data. We have ADP employment, initial jobless claims, again, moved up a day because one more time, folks, the federal government, which, SEC is a part of the federal government, and so therefore the U.S. equity markets, however, the U.S. markets will be closed on Thursday for President Jimmy Carter's funeral. He's already in Washington, his body or his casket is in Washington. It will be within the Capitol Rotunda, and for last respects. So that funeral is on Thursday. So what normally comes out on Thursday would ADP employment, initial jobless claims, wholesale inventories, et cetera, were going to come out on Wednesday instead of Thursday. So for tomorrow, we get ADP employment initial jobless claims, both at 8. Well, ADP is at 8:15. Initial jobless claims are 8:30 a.m. Eastern, and then at 10 a.m. wholesale inventories, and at 3 p.m. consumer credit. So those are what we have in numbers. And so, yes, I will make an update tomorrow, but it'll be for Friday. Thursday we're closed, it'll be for Friday. So that's the other thing we got going on. We have, remember I talked to you yesterday that we had Christmas on a Wednesday, New Year's on a Wednesday, and now first full week back, we've got another, not a free day, but that's what it's going to end up being, because I don't think any of us are going to be going to Jimmy Carter's funeral. And if you are, my respects. But we have another break in the trade week. So we're off on Thursday, then we have Friday. Then we have one full week, provided nothing else happens. And then we get Martin Luther King holiday. That's on the 20th, which happens to be the day we inaugurate the new president. So a lot coming up. All right. So the next update will be on Wednesday, January the 8th.